New York Times took a look at some of the people involved with Bitcoin and other cryptocurrencies in the Bay Area. It covered a lot of ground in terms of the ideology, the personalities, and how they cope with the mercurial nature of the prices. On the one hand, there is a general acceptance that the price could do anything, that it very well could be a bubble that goes puff. One person mentioned in the article is a blockchain lawyer, I don't know either, who said that if it goes to zero, a lot of people will need a lawyer. There is a do-gooder aspect to this that is interesting. I mentioned a while back having met someone very involved in Bitcoin who felt strongly that one of the big features of Bitcoin is that no government can debase it. This ties in with the NYT article talking about the banking system being rigged, only benefiting a few people, and that Bitcoin can distribute the wealth more equitably. I am not sure how true this in terms of reports about how concentrated Bitcoin is. The article noted that 4% of Bitcoin holders might own 95% of the tokens. Another interesting idea is the extent to which a lot of 20-something Bitcoinarians, a term I might have originated on Twitter, have started a plan on starting a cryptocurrency hedge fund. A hedge fund manages part of the system they say is rigged. I don't know, but some people would obviously say yes. I am not critical of someone trying to expand their sphere, but this is a watch-out situation in terms of markets and the behaviors that drive them, being a different realm than working in cryptocurrencies. There is an element of luck here for the Bitcoin mega-millionaires. Yes, they had foresight to get on board, but you have to believe that other 20-somethings got very involved, both financially and with their time, in potentially transformative technologies that failed, and maybe the only difference was luck. If you want to invest in hedge funds, you might want to move slowly in giving money to a 27-year-old manager with no market experience. Investing in Bitcoin offers the potential for very favorable asymmetric risk. I actually think one of those crazy-sounding price targets is possible, but the probability of zero is also high. As I have said in a few places, the internet is alive and well without Netscape or AOL. Someone with $200,000 in accumulated savings who puts $5,000 into a cryptocurrency could see that $5,000 become $200,000 is $0. Growing to $200,000 could be life-changing in a great way, while $0 might not have any negative impact. It's not literally a no-lose situation, but it is close. The key is position, sizing, and not using a credit card. One additional aspect from the article to cover that I like a lot is captured in the following passage. This is one of the core beliefs in this community, HODL, hold, typed very fast, as if in a panic. HODL even if you feel FUD, fear, uncertainty and doubt. If you show wealth, it means you don't really believe in the cryptocurrency revolution, a full remake of the financial system, governments and our world order that will send the price of Ether up astronomically. HODL when everyone has FUD, Mr. Hummer said quietly, to explain why he still lives in a dorm room. To the extent wealthy, young, Bitcoinarians are living well below their means, that is an encouraging behavior. Based on the anecdotes in the article, and you've read about other young people who've made life-changing sums of money, real wealth is being created, and I would hope that anyone sitting on a large Coinbase account balance would let it actually change their life. Take a little off the table, let the rest soar or implode, you still benefit handsomely. On a related note, a couple of blockchain ETFs started trading on Wednesday after Bitcoin funds were all backburnered. I dissected the blockchain funds, which you can read about here. Disclosure: we have no positions in any stocks mentioned, and no plans to initiate any positions within the next 72 hours. I wrote this article myself, and it expresses my own opinions. I am not receiving compensation for it. I have no business relationship with any company whose stock is mentioned in this article. Additional disclosure: to the extent that this content includes references to securities, those references do not constitute an offer or solicitation to buy, sell or hold such security. Advisor Shares is a sponsor of actively managed exchange-traded funds, ETFs, and holds positions in all of its ETFs. This document should not be considered investment advice, and the information contained within should not be relied upon in assessing whether or not to invest in any products mentioned. Investment in securities carries a high degree of risk, which may result in investors losing all of their invested capital. Please keep in mind that a company's past financial performance, including the performance of its share price, does not guarantee future results. To learn more about the risks with actively managed ETFs, visit our website advisorshares.com. Advisor Shares is an SEC-registered RIA which advises to actively manage exchange-traded funds, active ETFs. The article has been written by Roger Nussbaum, Advisor Shares ETF strategist. We are not receiving compensation for this article and have no business relationship with any company whose stock is mentioned in this article.